Hey everyone, welcome back to Corporate Decoder, the place where we untangle the confusing world of corporate filings. Today we're diving into Alaska Air Group's latest report, and let's just say things are getting interesting. Stick around because what they've revealed might make you rethink your next flight. Before we get into the nitty-gritty, if you are new here and love getting straight answers about what these company reports really mean, make sure you hit that subscribe button. And if you want to hang out with us even more and discuss these insights, join our Discord community. The link is in the description below. Alright, so what is this report all about? It is a current report, specifically an 8K filing, which companies use to announce big news that shareholders need to know about right away. Think of it as a public bulletin board for important company events. For Alaska Air Group, this filing is from the 31st of October 2025, and it mainly talks about their plans for giving updated financial guidance. This section, Regulation FD Disclosure, is where Alaska Air Group is telling us they're going to share some updated forecast for the fourth quarter. Now, here is the kicker. They're waiting until early December to do this. Why the delay? Because they need to figure out the full financial impact of some recent disruptions. Yes, you heard that right. Computer problems. You know how frustrating it can be when your apps glitch. Imagine that on the scale of an entire airline. They're also making it clear they will not be holding a regular earnings call for the third quarter. The results from that period were already put out there in an earlier filing on the 24th of October, and you can find them on their investor relations website. So, no live Q&A session with management this time around. They're just giving the update and moving on. Now, the legalese here saying this information isn't considered filed in the traditional sense for certain legal purposes is pretty standard boilerplate. It basically means they're sharing this info to be transparent and follow the rules about communicating important news, but they're not legally bound by it in the same way as a full financial report. It is a way to give the market an update without opening themselves up to certain types of legal scrutiny, tied to specific reporting sections. Let's talk a little about Alaska Air Group itself. They're a major airline in the United States, operating primarily in Alaska, the Pacific Northwest, and along the West Coast. They're known for their network covering a lot of ground, both literally and figuratively, connecting people to unique destinations. Their stock ticker, for those who like to follow along, is ALK. Because this is an 8K and not a full financial report like a 10Q or 10K, we don't have a detailed breakdown of their revenue, expenses, or profits in this specific document. This filing is more about providing timely updates on significant events or disclosures. However, the fact that they're highlighting it disruptions as a factor impacting their future guidance is significant. When an airline faces issues, it can have a ripple effect. Think about flight scheduling, passenger notifications, baggage handling, and even the operational systems that keep planes in the air. These problems can lead to flight delays, cancellations, and unhappy customers, which directly translates to lost revenue and increased costs for things like rebooking passengers and operational recovery. The signature at the end from Emily Halverson, who is the Vice President of Finance, Controller, and Treasurer, tells us this announcement is official. She's the one signing off on this important update on behalf of the company. So, what is the big picture here? Alaska Air Group is signaling that they've had some meltdowns that are going to affect their bottom line for the fourth quarter. They're being upfront about it, but they're holding off on giving a precise number until they've fully crunched the damage. This is a classic example of how technology, or the lack thereof, can directly impact a company's financial performance and its ability to deliver on its promises. Now, looking at this from a broader perspective, it highlights a critical risk for all airlines in today's digital age. Robust and reliable systems aren't just a convenience anymore, they're the backbone of operations. A failure in these systems can ground flights, frustrate travelers, and cost airlines millions. Alaska Air Group's situation serves as a stark reminder of the vulnerability that comes with reliance on complex technological infrastructure. As investors or observers, we need to watch what kind of guidance they provide in early December. Is this a short-term blip, or does it suggest deeper systemic issues with their IT infrastructure? The extent of the financial impact will tell us a lot. If it is a significant hit, it could affect everything from their profitability to their stock price. In conclusion, Alaska Air Group's 8K filing on the 31st of October serves as an early warning about upcoming financial impacts from its disruptions. While it doesn't give us hard numbers yet, the announcement itself is notable. It is a reminder that in the airline industry, operational hiccups, especially those rooted in technology, can quickly translate into financial consequences. We'll be keeping a close eye on their December update to see the full story unfold. Alright, that is our quick decode of Alaska Air Group's latest filing. What is your take on this disruption news and its potential impact on the company's future? Let us know in the comments below if you found this breakdown helpful. Please give this video a thumbs up, it really helps us out, and subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.